Mr. S Krishnakumar, who is joining us right now to talk more about markets. Krishnakumar is, of course, a market veteran and has had leadership positions in several AMCs, now an independent investor, and is in the process of setting up his own AIF and PMS. KK, afternoon. Thanks so much for your time. Let's start by coming straight to the point. What is keeping you busy? What are you researching to add? Because in the last, I would say, March low onward, small cap, mid cap have rallied 30-40%. Everything has rebounded very smartly. What makes you comfortable to buy in terms of areas, themes?
Yeah, I think the bigger picture is getting a lot more clearer, basically, which gives a lot of comfort. We've been talking about Fed tightening, etc., and now we are probably reached a stage where we are factoring in the kind of softening inflation. Fed rates will come off in 6 months, and so globally, bit of softness and growth coming through, which essentially all this leads to a weaker dollar, and we're going to see fairly large flows coming back into emerging markets, and particularly India. So that's the bigger picture to start with. But within that, as you said, falling inflation, which is the theme that we need to play for the next 24 months, I think is something which will benefit a whole host of manufacturing entities, basically. Take it across, auto components, light engineering companies, look at capital goods, small equipment players, power electrical companies, cement, building products. All these players are going to benefit hugely from falling energy and commodity costs, in addition to logistics costs, which are also falling through. So these companies are definitely gaining market share against the global competition, and also given the incentives by the government, there's a lot of impetus on exploring new markets and getting market share in spite of a weak global demand, right? So that's the broad framework in which we are looking at ideas, basically, be it across defense manufacturing or under industrial capital goods, consumables like abrasives and things like gears, pumps, engines, transformers, switchgear. So there's a whole lot of capex that is underway at this point in time, and we have just started off, right? So for the next 3 to 5 years, we're going to see substantial amount of investments happening in the Indian economy, and that is going to really spur the demand for various engineering and capital goods, equipments, and also build a long runway for growth in cement sector per se. And the benefits of energy costs, etc., will also favor the cement sector. So I think these are sectors that have been beaten down in the last many years, and we see a very good value that is emerging if you look at a 3-year perspective of growth.
Yeah, I also see NBFCs is an area of your interest. Now, let's talk about what kind of NBFCs. Is it traditional mortgage companies, Bajaj Finance variety, or are you looking at housing finance companies beyond the HDFC Limited, the mid-tier housing finance, or are you looking at some of these microfinance companies which are coming out with good quality numbers and are into SME financing backed by technology? What variety are you looking at?
So just talk about technology. Technology is going to be an important part of every business, right? There is sort of digitization, automation happening, and that's going to help the entire sector. So the kind of credit approval process, etc., the access to customers and the quick turnaround time, something that is a given that companies have to succeed. NBFCs generally tend to be hurt in a rising interest rate scenario because the assets are fixed at fixed rate, and then the liabilities keep repricing themselves. Today, what's happening is we are seeing a situation where rates are kind of at the peak and going to fall. So when rates kind of tend to fall, you will have spreads improving over the next 3 years, basically. This is the basis hypothesis. And from a credit growth perspective, as you know, that there's a lot of investments happening on the ground, and with the revival in the investment climate, a lot of mid-tier companies, small, medium enterprises, etc., need huge credit growth, basically, right? So in addition to the equity capital requirements, the credit requirements are going to go up, and that's where the NBFCs, the last mile connectivity, and the kind of access to data are in a good position to kind of move fast into the areas and lend and score over the So that's why in this part of the cycle, when rates are expected to come down over the next 3 years, I think we should get into NBFCs. And from a segment perspective, I think if you look at the credit markets in SME, MSME, and also real estate financing, these are the areas where we'll have a lot of growth that will come in, and that is in addition to the traditional commercial vehicle financing that is happening.
No, there was a fear in the market. In fact, BofA did come out with a research report saying after this earnings season winds up, we could see almost 40% cut in Nifty. But the way earnings season is actually panning out, it appears that most of the numbers have been either in line or slightly better. There was no major disasters in the earnings season so far. Are you saying that, do you agree with that hypothesis, or what's your thought of the earnings season so far?
I think there's been a bit of positive surprise in the first 45 days of the earnings season that we are seeing better results than expected. However, always the negative surprises come in the end of the result season. So I would like to reserve my comments till the end of May. I do see that we will be broadly in line to a little minor disappointments on the fourth quarter. But going forward, I think the view in terms of falling inflation, that's definitely going to kick in. As you have heard about the sea freight logistics costs coming down, the coal costs coming down, the crude and gas baskets also coming down, in addition to the metal prices. I think it's a huge positive impact on the bottom lines of various companies. And also from the agri side, there's definitely a lot of softness. So across FMCG, across sectors, you will see a lot of growth kicking in on the profitability front, even though volume growth will be a little muted in the next 12 to 24 months. So the commodity is the only space there could be some weakness.
All right, KK, we'll let you go on that one. Thanks so much for joining us on the show today. KK was talking about areas of the market he likes and on the earnings season.